Hello and welcome. You're watching Your Trades on ET now with me, Snehisha, and with me as always is Priyanka Uppal. And Priyanka, not a very good day coming in for our markets at least. And now it's been a trend that we're penciling in something else in the morning at the start of the day with the GIF Nifty indicating a very good start every day. And then towards the end of the trading session, the entire picture is reversed and we've ended up in the red quite a few times over the last week as well. And even today, Nifty has ended the day with a downtick of more than 0.5%. A 0.6% cut coming in on Nifty. 140 points lower is where we've ended at 22,302. That's for the Nifty. Nifty Bank also very sharp cuts coming in. 1.2% downtick for Nifty Bank. 609 points almost lower is where we've ended. Sensex too in tandem with both of these. 0.5% cut coming in for the Sensex as well. On the other hand, let's take a look at what the broader markets have done, and Nifty mid-cap is a real loser in trade today because that has sunk even below the benchmarks and almost a 2% drop coming in on Nifty mid-cap. That's the mid-cap index on
In fact, Snehi, did you notice that at one point in time there were 90% of the mid-cap stocks which were trading in red?
Well, absolutely. Not a very good day coming in, and if we think
strong
mid-cap,
bounce of volatility, you can say.
Yeah, and if we think mid-cap is the big loser, well, we're in store for more disappointment because small cap has done even worse than mid-cap, and small cap is also down almost 2% in today's trading session. So, well, that's what largely the market roundup is looking like. And most sectors have also ended the day in the red. Nifty Realty being the biggest loser, almost 3.5% down is where we've seen that sector coming in. There you have it on your screen. Nifty Metal followed the big losses as well. 2.5% downtick coming over there as well. Nifty PSU Bank, Nifty Energy, Pharma, Auto, Media, all of them down anywhere between 1.5% and 2%. On the flip side, FMCG was a basket that shone very brightly in trade today, supported by HUL, ITC, Marico, Britannia, all of these stocks doing pretty well, and Nifty IT also has marginally ended the day in the green, Priyanka.
Ever since the numbers came in from Dabur, that's what the trend we saw, that this was the only sector which was in green today because, of course, the urban growth for Marico numbers, fantastic set of numbers, urban growth moderated, but the rural growth was strong, and this is what market has been looking for ever since Dabur spoke about that, the rural growth. So it looks like green shoots visible, light at the end of the tunnel. That's what the market is rewarding the entire FMCG pack also because of this. Margins were also very nice, and of course a lot of broking firms coming in with reports for FMCG, especially for on Marico. Investec hiked the target price also. Other than that, of course, there are a lot of concerns. Clearly, the way VIX has been spiking, it is third continuous days that we have seen hike in VIX, and the reason is that VIX is now at 1.5-year high. Nifty has slipped below 20 DMA, 50 DMA, so a lot of concern, and the deeper cuts are in broader market. But then, and we saw the deeper cuts in realty space also. Nifty real estate fell by 4%. The biggest of the cuts, biggest of the pressure coming in from sectors like Prestige, Phoenix Mills. So in fact, the whole screen looked deep red today, and in fact, this is not just this has been a continuous trend since Friday when we saw that this VIX started spiking in. Is it pre-election jitters, FI selling, lack of fresh triggers, market wants to see election outcome, all that combined together now. What lies ahead? Now, since we've been, now we head for expiry week also in 2 days. We are briefly at the range of 22,300. Kunal joins in to help us understand that what should be the way ahead now, how to navigate the markets from this point in time. Kunal, good afternoon. Any sign of cool off or any sign of getting oversold? What do you make of the markets at this point in time? At least in the terms of index range, and what do you have to say on the VIX, the continuous spike in VIX?
Good afternoon. So just one change from what you mentioned. It was not 3 consecutive days, but it's 9 consecutive days for VIX, where we've seen the VIX jumping up from 9.885 approximately to now almost on the verge of breaking past about the 17.5, 17.6. That was the high which the VIX had made today. I was actually looking at the data point. When was this, such kind of a 9-day rise on a consecutive basis seen in VIX? And it actually takes back the first period towards 2020 March. So I think that was one of the points where the VIX had risen up sharply. But net, I would believe that it's an adjustment which the markets have been making because of the sharp rise in VIX. And to try and negate that sharp rise in the VIX, the indices have to come back into a trading range in the midpoint of the trading range, or maybe at the lower end of the trading range. So over the last few days, we were going into a 200 to 50 odd point range of consolidation for the Nifty. Because of the jump in VIX, the range expands significantly, and now we are looking at almost a 700 to 800 point range for the index, where 22,800, 22,000 could remain as a base or a strong support for the index, and on the upside 22,800 could remain as a major resistance.
Okay. Kunal, I just remember, I recall that a few days back when you noticed that VIX cracked all of a sudden 20%, more than 20%, and you came up with a very interesting trend that whenever there's a sharp crackdown, then the market also reacts sharply, rebounds sharply. Any such interesting report at this point in time, or any sharp observation on this front?
See, one of the observations which I've seen over the last decade and a half and more, since when I've started to understand and track VIX more on a impactful basis on the indices trends, is that whenever the VIX rises up such on a very sharper note, there is an eventual bottom formation process which gets generated for the indices, and those bottoms, they generally don't get tested for months and quarters to come by. So I would probably believe that whenever the VIX starts to cool off, ideally it generally should happen once the event is out of the way and once we see the election data points clear. I think post that we could actually be at a point where over the next two to 3 weeks the markets can actually form a major bottom for itself, and that could be a very big opportunity for medium term, long term traders to try and participate and come back into the indices.
All right, Kunal, thanks for that view coming in. But like we've been seeing some volatility across markets. So amid a market like this, how do you navigate this volatility, and what are your picks? What are you picking out?
So there are a couple of names which have been starting to look attractive. In fact, for the first time, I've been initiating a buy on the IT majors. I think these stocks are making a strong comeback. Wipro is something which I would recommend at current levels. The stock, for the first time, I think in the last 3-4 months, is closed above the 20-day moving average. So this could be a strong indication that the stock may see a strong turn of events as well as a price surge in the near term. Targets of 500. Over the very near term, stop loss could be kept at 444. And Aavas Financials is another interesting name, a bullish engulfing pattern today. The stock has shown on the candlestick front, so would suggest a buy with a target of 1650. Stop loss at 1570.
All right, some action in the affordable housing space. Of course, these are the two recommendations what Kunal has been recommending. We'll let you go on this, Kunal. Thanks very much for both the stocks. Now, Srishti joins in for her observation on the charts. Srishti, could you find out breakdown only, or do you have a breakout stock also?
No, we have both the counters. Firstly, on the breakout side, and the second one that we're going to be highlighting is one of the breakdown stocks. If we talk about the breakout stock today, then clearly the FMCG pack was ruling the charts. It was the star performer in today's trading session, and in that pack, have a look at Dabur. This counter was flying high by more than 5 to 6% gain in today's trading session. And what was interesting to see, on the screen you will see a daily chart, because in the daily chart as well, it was a falling trend line breakout is what we have witnessed. But on the weekly chart as well, if you will see, then the stock is making a comeback after forming a triple bottom for itself, and that's even a stronger indication when a stock jumps in such a significant manner. Other than that, just a 3-4 days candle, if you see, the stock did make a strong bounce from its 20-day moving average, flying high with actually good volumes. So this is the first stock that we wish to highlight on the breakout side. We're moving on to the next one. This one is a breakdown stocks, but not a typical breakdown that what we usually witness, but maybe some bit of a correction is what we are witnessing on Voltas, and hence we are highlighting this because the stock did retrace from its all-time high levels. This is the second week that we are seeing the stock making a retracement from 1500 odd levels, and in today's trading session down about 4.5%. The stock did make a bearish engulfing candle for itself on the weekly basis. So all in all, if you'll see, then the Voltas did give a fantastic breakout, is now seen to be retracing, and this is what we are highlighting on the breakdown side. Not a typical breakdown, I would reiterate that, but all in all, we did see that it was a rejection from its all-time high levels, and today was a day when we have seen some of the shots getting added into the system as well. Back to you. Well, very interesting chart, Shrishti. Thanks so much for taking us through that. Voltas on the breakdown, and no surprise because Dabur has made it to the breakout side, part of the FMCG pact. That index was up 2% today amid a very somber market. But let's move on and talk about the word from the wise today, and that is Ashwin Agarwal, the founder of Demeter Advisors, and he believes that rural demand has not attained the level that it has achieved post-COVID. Listen into his views.
Rural demand has been very weak for almost 3 years now, and rural demand hasn't really come back to what it used to be after COVID. I think there was a lot of disruption in the rural disposable income on account of the disruption in jobs in the urban area on a post-COVID basis. But I think with manufacturing picking up, several of those jobs are coming back, and those transfers from urban to rural India might be getting back. The prognosis for the monsoons also is pretty positive this year, and food prices are also relatively strong. So I hope the rural demand picks up. I mean, it's been a big monkey on the back of a lot of consumer companies, including autos and consumer staples companies. So I hope rural demand comes back. My base case would be that yes, it comes back.
When you're also talking about the rural demand, which is, of course, a big trend, what market also saw and cheered also. We'll stay for a short break here. More to come when we come back. Don't go anywhere. We'll talk about derivatives also and the other big stories of the day.